look at each of these profitable trades. They all look almost the exact same. They are reversal trades that are happening at the exact same time in the day. Now, I've discovered something about the US markets that has become incredibly predictable and repeatable. It allows me to trade only 60 to 90 minutes in the morning to consistently find profitable trades every day before going to my full-time job teaching people how to trade. And it hasn't just worked for me, it's worked for a ton of other people and has stopped them from jumping from strategy to strategy, ending their years of struggle with trading. They finally found something that is consistent and works for them. And later I'll tell you about a $20,000 trading competition prize pool that you can join for free a little bit later in the video. Now, I've narrowed this down to 3 powerful market patterns and tricks most people overlook. Once you know all 3, you will never look at the market the same way again. You will consistently be able to spot profitable trades in the market. And I'll show you a trade that I recently took that has a bonus insight that will bring this all together for you. Now, I consistently lost money trading for years, and here's why. I wasn't looking for a specific pattern to trade. I wasn't patiently waiting for my trading plan to play out. Instead, I was consistently trying to catch every move that the market had, afraid of missing out on potential profits. My approach was chaotic. I jumped into trades just because the market was moving, hoping I could catch a quick win, but it never worked. My trades were rushed based on guesses rather than waiting for a clear plan. And I consistently lost money over time. And I know a ton of other traders are stuck in this cycle too. And that was me for years. But then everything changed for me. I learned to be consistently profitable because I learned to wait for a specific pattern and key factors to show up in the market. I learned to become patient, willing to sit on my hands if those setups didn't appear. Some days I take no trades at all, and that's what finally gave me an edge trading. Instead of reacting to what the market did, I instead waited for the market to come to me, and when I was ready and confident in a setup, I would take it. That's how I was able to consistently start to make money and stop losing money. So let me walk you through the 3 secrets I use every day before taking a profitable trade. Now let's jump into the first pattern, which is probably the most crucial, biggest observation I've ever made about how to get an edge in the market. Now, if you don't couple it with the second secret though, it kind of won't matter. It really needs to be combined with a couple of other things. Now, when the market has a massive move in one direction, most traders, my older self included, get too caught up thinking of how can I jump in this move and capture some of this money? I've already missed out on a massive amount of money I can make. But I realized over time is I would always be jumping in right when this move actually reversed. Because after a massive move, a lot of the times, this is usually when the market baits people in because it's actually overextended at that point and it needs to have some kind of healthy pullback. The market likes to move in healthy, methodical movements. Every move up has a counter move with a healthy pullback. This is how a stable trend operates. An unstable trend is when it shoots in one direction extremely quickly, and when that happens, it's likely to fail and have what I like to call the rubber band effect. Because to become healthy again, it needs to have a pullback into that more equilibrium type of healthy trend. And using that knowledge of looking for massive moves in one direction without pullbacks, we can start to see where opportunities of potential snapbacks can be. Now, this second secret is even more crucial because it times your entries with big players and market movers. And secret 3 will show you the final pieces that ties it all together, giving you the ability to consistently find high reward opportunities while avoiding a ton of false signals that will potentially lose you money. Now, here's the thing. most traders don't realize the market actually likes to bait them. Just like with that big rubber band effect where the market will move up, get overextended and snap back, at 8:30 Eastern Standard Time, when the US stock market opens, big players like hedge funds and institutions come in and push the market hard in one direction, which tempts traders to jump in thinking that they're gonna catch a big move for the rest of the trading day just when it opens. But that move often sets them up for a reversal and a bait in the opposite direction. This baiting effect often repeats and is the reason timing is so crucial. This timing that I've noticed often happens 30 minutes after the US market opens. And I've tracked this pattern over years, and it often happens 3 out of 5 trading days. Knowing this timing lets you anticipate when these moves are most likely to occur, and it allows you to drown out the noise and patiently wait for what matters. And so I've actually created a 30-minute reversal strategy guide that shows you multiple setups with this timing and how you can execute easily based with that. And you can download it with this QR code or via the link below. And when you combine this precise timing with the rubber band effect, you're no longer guessing when it comes to trading. You're trading with a clear plan and edge, which helped me turn myself from a consistently losing trader to now having a consistent plan that I can execute every day. Now let's jump into a real trade example here so I can illustrate to you the timing, the rubber band effect, and as well as the final piece that brings everything together. So first off, you can see the market opens for me in my time zone at 7:30 a.m. And so right here, the market opens up. The market has a big move in one direction without much in terms of pullbacks. And so think about the rubber band effect. It's likely to have some sort of pullback because this is an unhealthy move. And then if you couple that with, well, 30 minutes after 7:30 is 8 o'clock. And so what happens here is this has its move up and then starts to slow down at 8 o'clock. And so that would be a really good 2 indicators that this thing is likely to slow down and have a pullback in a big way. And instead, what I like to look for as my third key is that it comes up into what I have here is a big resistance zone. So you can use this strategy either betting the market's gonna go down or betting that the market is gonna go up. And so I was able to use those 3 things of the big rubber band move, the timing, and then a big resistance zone. And those paint the big picture that it's likely to have a big move up, slow down, and snap and give that back lower. And you can use that to capture a lot of money. I made about $3,000 on this specific trade. Now to tell you about the prize pool, NinjaTrader, the platform I use here is having a $20,000 trading competition. You can join with a demo account, basically risk-free, trade in this competition. It lasts for 5 days, so it's actually over pretty quick, starting September 14th, which is a sick way to practice trading in a risk-free environment, but also be able to make some real money to start a trading account for yourself. So you can sign up for that using the link below or this QR code. Now, let me walk you through a full trade example so you can really understand how I use these to enter in when I see this setup. This doesn't happen every day. Again, trading is hard to make this consistently work. And so that's why for me, what made trading work for me was patiently waiting for this setup to happen. And so let me walk you through another one just to show you how repeatable this really is. And so here, 7:30, the market opens up. And so at that point, I'm just watching, I'm waiting. I wanna just see, how does the market open up? What is it doing? And generally, I will have key areas of support or resistance drawn off of a 15-minute chart. And then I like to watch and trade on a 1-minute chart. So right here, we're watching a 1-minute chart, but you can see it's come down into a support level. And so I'm just sitting here waiting for that timing to show up. And one thing is, when you're counter trend trading, the difficult part is knowing when it's gonna reverse. And that's why waiting for a big support zone to happen. And you can see it's blasting through a couple of these support zones. There was one here, it blew through. And so it's waiting for that timing and as well as seeing how it reacts to those levels. But then also a big picture idea is, okay, when is this downtrend broken? I like to use trend lines a lot of the time. I like to also use the highs and the lows of the swings. As the market trends down, it's making lower lows and lower highs. And when it shifts to an uptrend, it's gonna start making higher highs and higher lows. And so I like to try and capture and jump in kind of in this area when it started to show that it's potentially reversing. And so you can see here, it's broken. It started to break that trend line and it happens pretty quickly. And so that's why you want to be laser focused when it happens and it gets to these areas. And if you ever watch my live training videos, I'll be walking around corners of the room. I'll be doing stretches. I'll leave the room. But when it comes to your area that you're really looking for an opportunity, you want to be dialed in on what it's doing, because what I'm seeing here is it's come down to a support level. This trend is clearly over. Not even just looking at the break of this downtrend, the fact that look at the candlesticks, right? Red, 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 red. And then it started to have a bit of a pullback. There's some green in here. There's a lot of dojis and choppy candlesticks. It's essentially showing you that the momentum has started to slow down. And when momentum starts to slow down at a key area like this, it's likely that it's going to find some strength and move higher and reverse. And that's what I like to see. And so big picture, there's a nice double bottom here. If you get that 30-minute reversal guide, you'll see most of the examples in there use and have a double bottom. So those double bottoms are really key. And the last thing is to jump in here. What you use as a final confirmation to jump into a trade is really, really tricky. It's hard to know exactly when, okay, when do I jump in? Because, you know, if you could say this was a double bottom, if you jumped in here, jumped in here, jumped in here, you know, a lot of times you're gonna have false signals. And so the way I like to enter in, it allows me to try and avoid some false signals, because sometimes these will set up in double bottoms and they'll just kind of continue lower. It'll just be a slow in the momentum. And so learning how to spot the difference between, oh, this trend is just kind of slowing down and it's going to continue lower and making a bear flag, it's called, versus it's slowing down and it's lost that momentum and it's going to gain momentum and switch in another direction. And so for me, what I like to use is I like to see some kind of failed attempt to continue lower. And so this double bottom, I think, does that. This red candlestick here that broke this double bottom low, I think does that. And then it starts to have a nice bullish candlestick here. And it makes a kind of a bearish candlestick actually right here. So essentially what the market's done is it's popped up here and it started to make a pullback. And so I think is, well, if it's gonna continue lower, it might just start to do this. But if it's going to continue higher, I think it's going to probably break this high. And that's a nice spot where I think once it's done that, that's enough confirmation for me. And so that's why I have a buy stop order here that essentially gets me in a market order once the price hits that level. And so it's essentially a way to jump in via momentum versus waiting for a pullback and getting in on a limit order. And so I jump in on the trade, and at that point, I put my stop in a place that I think makes sense based on the previous lows here and this double bottom. So essentially, if it hits this double bottom again, I'm happy to get out. I think at that point, you know, the idea of I'm going with the structure of the market, and that's when you want to get out of the trade, because you can see here, it's going to have some pullbacks. Nothing just goes straight up in one direction or straight down in one direction very often. That last trade I showed you very quickly, it went straight down, but it took about 20 or 30 minutes to really get going. And so a lot of the times, because the market's still at this area, gaining strength and at an inflection point, you know, it's not sure what it wants to necessarily do. There's a lot of sellers still wanting to get in, you know, people that are, you know, old me and maybe you that see this big move and think, well, it's consolidating here and I won't think it's going to continue lower, so I'm going to jump in. And so that's pushing the price down here still or keeping it lower. But then there's people like me coming in saying, hey, well, I think we're at a good level. And so that balance is happening, making it so the market's just sitting here and chopping, and then eventually some imbalance happens. You know, those sellers start to dry up, a lot of buyers come in, and it pushes the market higher. And so, you know, it doesn't always take that long, but sometimes, you know, trade on a 1 minute chart, even 5 minutes or 10 minutes of just sitting in this chop can feel like a decade. But at that point, you know, I just managed to trade how I see fit. To me, it felt like the market was just gonna pop up here and maybe come back. It felt a little choppy. I didn't think that it was going to go much higher. And so I jumped out here getting about $750 in the span of, you know, 30, 45 minutes. And then I move on with my day. And so if you want to take this strategy to the next level, make sure to get that free reversal guide in the description below. Also check out NinjaTrader. I've used it for years. It's super good. And if you want an even more detailed walkthrough of this strategy, check out this video right here. It's over an hour long and it's going to explain everything you need to know.